Assalamualaikum warahmatullahi wabarakatuh. We are from Group 4. We want to present about the MFRS 136 about the impairment loss. My name is Nur Fazlinah Beti Mak Fazli and my matric number is 01D8023F2011. I want to start the presentation about the short introduction about the company. The SUNWAY Group commenced operation in 1986. Primary focus on the development of Bandar Sunway Township in Petaling Jaya. It was listed on the Bursa Malaysia Securities Bandar on the 16 February 1984. Sunway City BERHAD was incorporated in the 1982 and engaged in the investment and development of the residential, commercial, retail, leisure and the healthcare property primary in Asia. Sunway's core business are property development and construction. Sunway's most notable subsidiaries are located close to the headquarters. They are include two hotels, which is Sunway Resort Hotels and Spa and the Pyramid Tower Hotel. Other tourism-related facilities include the Sunway Pyramid Shopping Mall and the Sunway Lagoon Theme Park. Next, Sunway Education Group comprises 8 educational institutions. Sunway Institution, 42 Kuala Lumpur, Sunway Lee Cordon Bleu Institute of Culinary Arts, Sunway College, Sunway International School, and Sunway International School Sunway Iskandar. Sunway Group is the part owner of the campus.
My name is Nur Izzati Aina binti Mak Fadili and my matric number is 01D8023F2001 and I'm going to present the definition of MFRS 136. First, we have impairment. Impairment is an asset is impaired when its carrying amount exceeds its recoverable amount. Next is carrying amount. Carrying amount is the amount to which an asset is recognized after deducting any accumulated depreciation and accumulated impairment loss. Next is cash generating unit. Cash generating unit is the smallest identifiable group of assets that generate cash inflow that largely independent of the cash inflow from other assets or group of assets. Next is recoverable amount. Recoverable amount is the higher of asset fair value less value in use. Lastly, we have value in use. Value in use is the present value of the future cash flow expected to be derived from an asset or CGU. Next, we move to objective. The objective is to prescribe the procedure that an entity applies to ensure that its assets are carried at no more than their recoverable amount.
So I will continue the presentation. Before that, I will introduce myself first. My name is Nur Adila binti Amin and my matric number is 01D8023F2017. So I will continue with the recognition and measurement. According to MFRS 136, paragraph 59 to 64 set off the requirement for recognition and measuring impairment loss for an individual asset other than goodwills. So if an asset recoverable amount which is value that can be recovered is less than carrying amount which is book value, reduce it to the recoverable amount, the difference is called an impairment loss. Next, impairment loss is normally recorded in profit or loss immediately, but if the asset was revalued under another standard like MFRS 116, record the impairment as an revaluation decrease instead. For non-revalued asset, record loss in profit or loss. For revalued asset, record in statement of other comprehensive income, which is SOCI, but only up the amount of an previous revaluation surplus for the asset. If the impairment loss is more than the carrying amount, only recognize a liability if another standard requires it. If recognition impairment, adjust depreciation, amortization, but based on the carrying amount over the asset remaining useful life. If impairment is recognized, also adjust deferred tax asset or liabilities under MFRS 112, comparing the revised carrying amount with its tax base. So that's all from me.
Assalamualaikum and greetings. My name is Nur Alisanta Shamit Shariza. My matric number is 01D82 So let me talk about disclosure. General disclosure requirement, which is paragraph 126 to 133, which is show total impairment losses and reversal for each class of assets. State when in profit or loss or OCI they are recognized. Explain event or reason for the impairment or reversals. For each affected asset or cash generating unit, CGU disclose the recoverable amounts and method used, fair value less cost of disposal or value in use, the discount rate used if value in use, key assumption or valuation techniques if fair value basis. Okay, and then for the second one, we have additional disclosures, CGUs with goodwill or indefinite life, intangibles, which is paragraph 134 to 137. For insignificant CGU, current amount of goodwill, and indefinite life intangibles, basic or recoverable amount, value in use or fair value. And then we have if value in use, disclose key or assumption group rate, discount rate, projection period, and justifications. And then for if fair value, disclose valuation technique, fair value hierarchy, key assumptions, and any change. If impairment risk exists, show sensitivity analysis, how much assumption can change before impairment. Thank you. That's all from me.